Welcome to the channel Get Rich. If you are new to this channel, please subscribe to this channel and hit a little bell icon. So today the company we are going to analyze belongs to Indian auto ancillary industry. So let's get started by looking into auto ancillary industry. So the Indian automobile industry is the fourth largest in the world and is 70 billion US dollar market, with revenues growing at a CAGR of 12% over the last decade. So the industry contributes up to 7% of the national GDP and has been identified by the government as one of the key contributors to the national economy. It has the potential to generate up to 300 billion US dollar in revenues by 2026, creating 65 million additional jobs and contributing over 12% to the country's GDP. And also, India's household car penetration, which currently stands at 7%, is expected to steeply increase as the country's GDP improves. The auto ancillary industry is 39.7 billion US dollar and it increased to 51.2 billion US dollar in 2017 to 18. The industry is at an inflection point as it comes on par with global safety and emission norms. India is fast emerging as a global hub for auto component sourcing owing to its cost-effective manufacturing base and also being geographically closer to key automotive markets like Europe. The turnover of the auto component industry, which contributes 2.3% to India's GDP, is anticipated to reach 200 billion US dollar by financial year 2026. With BS6 being made mandatory from April 2020, the two-wheeler industry in India will be among the world's first to follow such strict emission norms. So if you are having a look at auto ancillary export, it was $9.7 billion market in 2012 to 13 and it increased to $13.5 billion market in financial 2017 to 18. And if you look at the locations where it is exported to, it's Europe, it's 34%, North America, it's 28%, Asia is 25%, Latin America 6%, Africa 5%, and so on. So let's have a look into the company, which is Endurance Technologies. So Endurance Technology is a leading automotive component manufacturer driven by new products and technology and a tier 1 supplier to India's 2, 3 and 4-wheeler OEMs. It is well regarded for being an end-to-end solution provider for aluminum die castings, suspension systems, transmission systems and braking systems. They are India's largest aluminum die casting manufacturer. It also has growing European operations catering to four-wheeler OEMs through its overseas subsidiaries in Italy and Germany. So let's have a look at their group structure. So Endurance Technology Limited, it's mainly manufacturing aluminum castings, suspension, transmission and braking systems. It has a promoter group holding of around 75% and public holding of around 25%. And they have overseas subsidiaries. One is Endurance Overseas SRL, which is a special purpose vehicle, and also they have Endurance AM GmbH. So it's mainly for high pressure die casting and machining. So with this they have Endurance SPA, they have Endurance Engineering SRL, they have Endurance Casting, Endurance Adler and Greminica SRL. We will have a look at each of these subsidiaries in detail. Endurance Technology is the largest aluminum die casting manufacturer in India in terms of capacity and output, and is one of the top 2 companies in suspensions, transmission and braking system for two-wheelers and three-wheelers. Through its aftermarket business for domestic and the export market, it also addresses the B2C replacement market for a variety of auto components. Its technological prowess is recognized by all the major two-wheeler and three-wheeler OEMs operating in India. So they are tier 1 supplier to a lot of OEMs. They have 17 manufacturing plants in India. As I said, they are number 1 aluminum die casting company in India. So they have 9 patents which is granted. They have 7 design registered. So they have 25 manufacturing plants operating in globally, 16 in India, 16 in Italy and 3 in Germany. Let's have a look at their revenues. So they are producing 71.4% of their revenues from India and 28.6% revenues from Europe. So they mainly have India business and also overseas business, which is mainly in Europe. And then if you look at over the years how it panned out between India and Europe revenues, so in financial year 14 they have 74.1% from India and 25.9% from Europe, and it increased to 28.6% from Europe and 71.4% in India. So it is good because they are increasing their European business, so they have higher profit margin in Europe, so it's good for the company. if you have a look at their revenues between different segments, so from two wheelers they are getting around 55.9% of their revenues they are getting from two wheelers. 11.7% revenues they are getting from three wheelers and others, and they have 32.3% of their revenues they are getting it from four wheelers. So if you are having a look at their revenue breakdown between different products, so 49% of their revenue are coming from aluminum die casting parts, 25% of their revenues are coming from shock absorbers, 5% of their revenue is coming from disc brake assembly, 5% from alloy wheels, 6% from clutch and clutch parts, and 10% from others. So then if you are comparing with Endurance technology with two-wheeler and three-wheeler industry components as a whole, Endurance value of the components supplied to the two-wheeler, three-wheeler industry is between 5 to 6% of the overall value, making it the largest parts supplier in this segment. So they have 5 to 6% market share in the entire two-wheeler, three-wheeler industry components. The company has a dominant presence in components it supplies. So if you look at aluminum casting and alloy wheels, they have a market share of around 16%. If you look at braking system, they have market share of 24%. If you look at shock absorbers and front forks, they have 33% market share. And if you look at transmission systems, they have 16% market share. So they are the market leader in all the segments they are operating in. And then let's have a look at their product mix. So Endurance Technology is a tier 1 supplier of four key components to two-wheelers, three-wheelers and four-wheelers. So one is aluminum die casting and machining, and then suspension components such as shock absorbers and inverted forks, and transmission components such as clutch assemblies, friction plates and continuous variable transmission systems, and braking components such as disc and drum brake assemblies, rotary disc and brake pads. Over the years, it has diversified itself into proprietary business which has grown faster than non-proprietary casting business and has benefited in terms of margins. Also, if you look at their European business is primarily to manufacture complex, highly machined aluminum die casting for the passenger car industry. This includes suspension and body parts, engine parts, and transmission parts. Its top 5 customers in Europe are Volkswagen Group, including Porsche and Audi, Fiat, Daimler, BMW, and Opel. So now it's part of Peugeot. So these are some of the products they are manufacturing. It's a clutch transmission housing, rear disc brakes, shock absorber, alloy wheel, front forks, and clutch assembly. So here you see the different components Endurance Technology is manufacturing for two-wheeler, three-wheeler, four-wheeler. Also, if you are looking to their different products into detail, so aluminum casting, their segments covered are two-wheeler, three-wheeler and four-wheeler. Their key products are crankcases, cylinder blocks and head covers, wing arms, alloy wheels, magnetozoid, etc. And they don't have any technical tie-ups for this particular aluminum casting segment, and their key customers are Bajaj, Royal Enfield, Honda, Hero, Yamaha, Hyundai, Kia and Maruti, and their competitors are Rockman, Sundaram Clayton, Ricoh, Yankee Wheels. These are their main competitors in this segment. So then if you look at their suspensions, so their segments covered are two-wheeler, three-wheeler and quadricycles. Their key products are shock absorbers and front forks, and they have technical agreements with WP Performance System GmbH for suspension components. Their key customers are Bajaj, Royal Enfield, Honda, Hero, and their key competitors are Gabriel and Munjal Showa. And if you look into the transmission segment, so their segments covered are two-wheeler, three-wheeler, quadricycles and small commercial vehicles. So their key products in this segment are clutch assemblies for motorcycles, three-wheelers, small commercial vehicles, CVT for scooters, friction plates, and they have technical agreement with Adler for transmission products, and it was acquired by Endurance in April 2020. Also, their key customers are Bajaj, Royal Enfield, Honda, Yamaha, and their key competitors are FCC Clutch and XCD India. And in braking systems, their segments covered are two-wheeler and three-wheeler. The key products are rotary disc brakes, assemblies for two-wheeler, tandem master cylinder assemblies, drum brakes, and they have technical agreement with Grimca for combined braking system and BWI for anti-lock braking systems. And their key customers are Bajaj, Royal Enfield, Honda, TVS. Their key competitors are Brembo and Nissin. And then if you are having a look into four-wheeler products, so these are the different products they are manufacturing for four-wheelers. So their strategy in Europe is to expand its presence in transmission and body parts with high level of automation with focus on German clients. In Europe, Endurance is gradually shifting its mix towards next generation models. The company has won orders worth euro 110 million for hybrid and electric vehicles. Of this, 80 million euro is towards hybrid vehicle parts and 30 million euro is for electric vehicles. The primary customer is Volkswagen and group companies including Audi and Porsche. The parts maker is in talks for additional orders worth 45 million euros. So if you have a look at their products, they are also diving into electric vehicles and hybrid electric vehicles, so which is already good because some of their products will become obsolete, so they are already focusing towards electric vehicles, so which is already good. If you are having a look at their product mix, so how much revenue is coming from which segments over the years, in financial 2017, 43% from aluminum die casting pots, 34% from shock absorbers, and in financial 2020 it's 42% from aluminum die casting pots, 35% from shock absorbers, and their disc brake assembly and clutch pots are gaining traction. Their revenue is increasing in disc brake and clutch pots. So then let's have a look at the Indian business. So they have fully machine casting. So the Endurance supplies aluminum castings to Bajaj and will increasingly supply castings to Royal Enfield as its new plant in Bellam in the south is commissioned in second half financial year 2021. So they also have transmission braking systems and they also have aftermarket sales for in India. If you are having a look at their customers in India, in Indian business, 53% of their revenue from Indian business is from Bajaj, 11% is from Honda Motors, 8% from Royal Enfield, 4% from Hero, and others 23%. If you are having a look at customer mix over the years, in financial 2015, 60.5% of their revenue comes from Bajaj. It decreased to 53.2% from Bajaj. They have other customers like Royal Enfield, which is increased from 6.2% to 8.4%, Honda Motors 5.7% to 13%, Yamaha 4.3 to 3.9. So they have increased their customer diversification, but still lot of their revenues are coming from Bajaj. Let's have a look at their overseas business, which is mainly four-wheelers. So they have aluminum die casting and machining of suspension and body parts, engine parts, transmission parts. They also do assembly of other metallic components like cast iron and steel. If you have a look at their revenue growth from Europe, so their revenue is 1409 crores in financial 2015 from Europe. It increased to 1990 crores in financial 2020. If you have a look at the PAT margin, it increased from 5.1% in financial 2015 to 6.9% in financial 2020. So they are increasing their PAT margin consistently. And also if you look at this revenue CAGR growth, it's 7.1% growth from financial 2015 to financial 2020. Let's have a look at EBITDA growth from Europe. So their EBITDA grew at a CAGR of 15.3% from financial 2015 to financial 2020. So it increased from 190 crores to 388 crores from financial 2015 to financial 2020. So they are growing very nicely at a CAGR of 15.3% from Europe. Let's compare their EBITDA margin in India and Europe. So if you look at their India margin from quarter 4 financial 2017, it's 11.8% and increased up to 15.2%, and currently it stays around 14%. But if you look at their EBITDA margin from Europe, it was 18.2% in quarter 4 financial 2017. It went up to 25% in quarter 4 financial 2019, and currently it stays at around 22.3%. It clearly shows that they have a much profitable business in Europe than India. And let's have a look at their customers in Europe. So 28% of their revenue is coming from Volkswagen Group, including Porsche and Audi. 27% is coming from Fiat. 15% is coming from Daimler. 6% is coming from Case New Holland, and also 24% is coming from other OEMs in Europe. Let's have a look at the customer evaluation from financial 2015 to financial 2020. 49.5% of their revenue is coming from Fiat and others from 50.5%. But then in financial 2020, it diversified a lot. Only 27% from Fiat and 28% from Volkswagen, 16% from Daimler, and 28.9% from others. So they are increasing their customers and also they are diversifying their revenues. So it's really good. If you are having a look at their aftermarket, they established their aftermarket business in 2001 and they export to 28 countries. They have 2 company run distribution centers and they have 335 distributors dealers in India, and they have 40 distributor overseas, and they have 65 full-time professional team. So their aftermarket business is a higher margin B2C business model, and they have a program for increasing retailers mechanics contact and loyalty towards a brand, and they want to improve the brand image and visibility. If you are having a look at their aftermarket sales, It increased from 174 crores in financial 2015 to 297 crores in financial 2020. It increased at a CAGR of 11.2%. Also, if you look at the percentage of consolidated net revenues from operations, it increased from 3.5% in financial 2015 to already 4.3% in financial 2020. Also, if you have a look at where they are doing their aftermarket business, they are doing 70% of their aftermarket sales is coming from India, and 15% from Asia other than India, and 9% from Africa, 6% from Latin America. Let's have a look at their manufacturing facilities. So if you have a look at their manufacturing facilities, they have 27 plants in multiple locations across India and Europe. If you look at India locations, they have 8 plants in Aurangabad, Maharashtra. They have 3 plants in Pune, Maharashtra. They have 2 plants in Patnakar, Uttarakhand. They have 1 plant in Chennai, Tamil Nadu. They have 2 plants in Sanad and Halol, Gujarat, and they have 1 plant in Kolar, Karnataka. They have 17 plants in India, and also R&D facilities. They have 3 in Maharashtra, Aurangabad, and 1 in Pune, Maharashtra. If you have a look at their European locations of plants, they have 3 plants in Germany and 1 plant in Torino, Italy, 2 plants in Chivasso, Italy, and 1 plant in Grugliasso, Italy, and they have 1 plant in Lamborghini, Italy, and they have 1 plant in Bayonne, Italy, and they have another 1 plant in Rovereto, Italy. They have 10 plants in Europe. The company is strengthening its engineering capabilities by building a proving ground test track spread across 29 acres in Aurangabad. The layout of this proving ground is designed by Haribo Mira, a renowned automotive engineering and development consultancy company. This 7.8-kilometer facility with high-speed stretch will serve as a test facility for brake, suspension, and transmission components for two-wheelers and three-wheelers to benchmark competitive products towards its first time right endeavor. This facility could also be used by OEM customers for testing their vehicles. The full-fledged ABS testing track is ready and testing is in progress there. The other test tracks, including gradient and durability tracks, are nearing completion. If you are having a look at their technological tie-ups, they have different technological tie-up with different companies for different technology. During the COVID-19 lockdown, while most businesses were trying to manage their cash flows and protect their profits, Endurance Technologies was out shopping. It made 2 acquisitions during this period. First, on 15th April, Endurance Technology bought a controlling equity share of 99% in Adler SPF for 3.5 million euro. Adler is a leader in system solution for clutches, gears, and friction plates with a niche in R&D, engineering services, and product development for OEM customers in Europe. Its new product technologies technical strength would be important for the company. The acquisition of controlling stake in Adler gives Endurance Technology total access to its technical know-how and intellectual property rights. This acquisition would also provide future growth opportunities for the domestic market in India and for export opportunities. Adler has a manufacturing plant located in Rovereto, Italy. It recorded revenue of around 6.4 million euro in commercial year 2019. Second, on 22nd May, Endurance bought a 100% stake in Grimica SRL, an Italian advanced service company involved in designing and developing new braking products for motorcycles and light vehicles, including co-design with OEM customers. The acquisition has been completed for a consideration of 2.25 million euro, which includes 0.9 million euro for the 100% stake in Grimica and 1.35 million euro for technical know-how, intellectual property rights of braking systems and chassis components and the Grimica brand. Grimica has been a technology provider for braking solutions to the company since 2015. This strategic acquisition aims to strengthen the company's technological prowess in the area of braking systems and is expected to provide impetus to the growth opportunities for the company's braking business in both domestic and export business. With the help of these 2 acquisitions, Endurance is planning to enter the 200cc plus motorcycle segment. These 2 companies are already having good technologies for the higher segment bikes. It makes it easier for Endurance to enter the large bike business for clutches and brakes in both Indian and European markets. So then let's have a look at their full-time employees and its location. So they have around 4,879 employees in financial 2020. Among them, 4,089 are from India, 226 in Germany, 564 in Italy. And then if you are having a look at revenue per full-time employee, so they have a full-time employees of 4,626 in financial 2014 and it increased to 4,879 in financial 2020. If you have a look at revenue per full-time employee, it's 9.2 million in financial 2014. It increased to 14.3 million in financial 2020. So they are increasing their revenue per full-time employee, which is a very, very good thing. Let's have a look at their growth opportunities. So the first one is product growth drivers. So they have product penetration by introducing products for new models. They are also introducing trading of two-wheeler and three-wheeler auto parts not manufactured by Endurance. They are also trying to expand their distribution and dealer network. And then if you look at the domestic growth, they are focused on Uttar Pradesh, Gujarat, Telangana, Andhra, Tamil Nadu and Rajasthan. And in exports, they are entering new countries every year in line with OEMs. So then if you compare financial 2012 with financial 2020, their total income consolidated increased at a CAGR of 7.7% and PAT margin increased from 4.8% to 8.1%. If you look at net debt to equity, it was 1.4 in financial 12 and it's 0 now. And if you look at their customers with higher than 100 crore sales, it increased from 2 to 9. So they are doing very good in the past 8 years. So then let's have a look at their growth with two-wheeler plus three-wheeler industry volume growth. So in financial 2014, the industry volume growth was 6.8%, endurance was growing at 14.8%. If you look at financial 2019, the industry volume growth was 7.1%, endurance was growing at 20.7%. If you look at financial 20, the industry volume growth was decreased by 14.2%, endurance decreased by 8.8%. So they are doing pretty good compared with the industry volume growth. So then let's have a look at their growth in Europe. They recently acquired two companies in Europe and they have huge opportunities for growth of some of the products in Europe. Their European business have high margin compared to India, so they can increase their profit margin as well. So they have very good growth opportunities in Europe as well. Having a look at the new business, so new business wins in India stood at 586 crores in financial 2020 from Honda Motors, Royal Enfield, TVS, Hero Motors, Hyundai and Kia. 50% of the business should start from Q2 financial 2021. Further, 1280 crores worth RFQ is under discussion and conversion rate is usually 50%. And also if you look at new order wins in Europe, they have 42.66 million euros in financial 2020 from Audi, BMW, Porsche, Volkswagen, Fiat, Mercedes, etc. Endurance has won orders worth 110 million euros in the last 2 years for electric vehicle and hybrid electric vehicle, which started this year. It should reach peak volumes in 2023. So also if you have an order breakup, 30 million euros for electric vehicles from Audi and Porsche and 80 million euros for hybrid vehicles from Volkswagen, Daimler, BMW, Fiat and Maserati. Further 45 million euros worth RFQs are under discussion with Volkswagen for electric and hybrid cars. So they have a very good order book and they are getting new orders as well even in this current scenario. So they have I think they have a very good growth opportunity in the future. If you look at some of their products, moving ahead, some of their products that will drive their margin expansion, which are machined aluminum casting, inverted front forks, combined braking systems, anti-locking braking systems and paper-based clutch assemblies, where realizations are higher. In India, they are also exploring to add new products to their existing product portfolio of aluminum die casting, suspension, transmission and braking systems. So their Europe strategy is to expand their presence in transmission and body parts which are power trained, maintain high level of automation, focus on German clients and make smaller acquisition for high margin business. To increase their presence, they are planning to move beyond Europe. While they are considering serving Southeast Asia from India, they are also contemplating to foray into newer markets from the European base. Also, their aim is to add 7 more countries in the aftermarket segment. With the replacement market continuing to show abundant growth opportunity, their aim is to focus on this segment and increase their share in this segment as well. Conversion of ICE scooters to electric will continue post normalcy. Share of electric vehicle in scooter has been 0.8%, 1.9% and 2.7% in the last 3 years and they see this trend continue. Growth of scooters share in two-wheelers has already stalled. Endurance has already started supplying components for Bajaj Auto's electric scooter Chetak, which has received an overwhelming response. Most of the products that the company offers would continue to be used if the industry turns into electric, except clutches, which is only 8% of the company's sales. If you are having a look at share of battery electric vehicles, it is 2.3% in 2019, and if you are having a look at share of hybrid electric vehicles, it's 7.2% in financial 2019. According to a study conducted by Drucker for the European Aluminium Association, average aluminium content in passenger vehicles in Europe has risen to 179 kg per vehicle in 2019 from 150 kg per vehicle in 2016. This is expected to increase further to 200 kg per vehicle by commercial year 2025. Battery electric vehicles have significantly higher aluminium content than their ICE variants, primarily due to aluminium used for the battery box, which further increases for hybrid and plug-in hybrid electric vehicles due to double powertrain components. In the last 2 years, the company has won 110 million euro of business for electric and hybrid cars. which has started in financial 2020 and will reach peak in financial 2023. Out of the new business won, 30 million euros is for electric vehicles manufactured by Audi and Porsche, and 80 million euros is for hybrid cars made by Volkswagen, Daimler, BMW, Fiat, and Maserati. So then the graph shows the breakup of aluminium percentage in different components in the vehicle. If you are having a look at aluminium demand in different vehicle types, hybrid electric vehicle have the highest aluminium demand compared to the ICE variant. And also if you look at the battery electric variant, they also have extra aluminium demand from battery housing, transmission, motor housing, and inverter housing. If you are having a look at endurance partnering with customers in their value addition journey, they are constantly eyeing their customer requirement in the existing and planned platforms. Based on changing trends in global market, their in-house R&D team also provides suggestion on new products to their customers. They are also leveraging the changing face of mobility the world over by maintaining a strategic focus on electric vehicles and hybrid vehicles. As some global OEMs gravitate towards total electric, they wish to be their preferred suppliers in this journey. In India too, they have engaged with several vehicle manufacturers in their electric vehicle journey. So these are all the growth opportunities they are having. Also, they are changing their technologies with the technology evaluation. So they are also working on electric vehicles and hybrid electric vehicles. So these are very good thing for the company. So then let's have a look at their financials. So if you are having a look at their revenues, they have a revenue of 4,949 crores in financial 2015, and it increased to 7,537 crores in financial 2019, and it decreased to 6,965 crores in financial 2020. So they have a CAGR of 7.1% growth in sales from financial year 2015 to 2020. And if you are having a look at their EBITDA, it increased from 637 crores in financial 2015 to 1,178 crores in financial 2020. And with the CAGR of 13.1% between financial 2015 to financial 2020. If you are having a look at EBITDA margin, it increased from 12.9% to 16.9% in financial 2020. So they are consistently increasing their EBITDA margin. Then if you are having a look at their profit after tax, it increased from 253 crores in financial 2015 to 565 crores in financial 2020. Their PAT margin increased from 5.1% in financial 2015 to 8.1% in financial 2020. They are having a huge growth with consistent increase in profit margin. So that's a very good thing for the company. And then if you are having a look at the dividend payout in March 2010, they don't have any dividend payout, and it increased to 16% dividend payout in March 2019. They're consistently increasing their dividend payout. This is also a very good thing. If you are having a look at their balance sheet, so their total asset increased from 1964 crores in March 2010 to 5070 crores to March 2020. And if you are having a look at their borrowings, it decreased from 1049 crores to 548 crores, and their reserves increased from 235 crores to 2865 crores. So they have pretty much strengthened their balance sheet to a great level. Then if you are having a look at their return on equity, it's been from 21% to 15%. So currently they are having a return on equity of around 17%. So more than 15% is always good. I like companies having return on equity higher than 15%. Also, if you are having a look at return on invested capital, it increased from 17% to currently to 23%. If you are having a look at return on capital employed, it was around 22.8% in financial 2015, and currently it's 21.7% in financial 2020. So if you are having a look at net debt to equity, it has 0.6 in financial 2015, and it reduced to 0. So currently they are a net debt free company. They don't have any net debt. So if you are having a look at the gross debt and cash equivalents, so they are a cash surplus company from financial 2020, and their cash and cash equivalents is going to rise, and they have a very pretty much strong balance sheet in the coming years. Having a look at capex, it has around 200 crores of capex in financial 2017, and it's around 300 crores in financial 2018, and it's around 450 crores in financial 2019. And financial 2020 it was around 300 crores, and it is expected to be below 300 crores for financial 2021, 2022 and 2023. Compared to their net profit, it is lesser than half of their net profit, and they have a pretty much good operating cash flow, so they will have a very good free cash flow. So that's very good thing for the company. Let's have a look at their shareholding pattern. So the promoter is holding 75% of shares, mutual fund is holding 5.7%, and FII is holding 16.3%. So the shares available for public is pretty less. It was around less than 1.5%. If you are having a look at the historic promoter holding, it decreased from 82.5% to 75%. It is due to the regulatory requirement, and the FII holding increased from 10.1% to 16.3%, and the DII holding increased from 5% to 5.7%. The FII DII are increasing shares, so it's pretty good for the company, and it has only less shares available for the public shareholders. If you are having a look at mutual fund shareholding changes in January, February, March, April, and May 2020, a lot of mutual funds are buying. In June, one of the mutual funds hold some shares, so it's pretty much on the buy side, so it's a pretty good thing. And then if you're having a look at the top shareholders of mutual funds, so the Axis long term equity funds holds around 0.93% of their AUM share, and Motilal Oswal mid cap 30, it's around 5.93% of their AUM. The AUM was around 1365 crores. And then Axis mid cap, SBI Magnum, Axis Focused, L&T India Value, Axis Growth, Aditya Birla small cap fund, Axis Equity Hybrid, BNP Paris mid cap, Axis Retirement Savings, Aditya Birla Manufacturing Equity Fund. So they have a lot of mutual funds are holding this share. If you're having a look at institutional investors holding, so the Nomura Holdings Incorporation have 4.1% holding, Axis Asset Management 3.7%, Capital Group 3.6%, UTI 2.1%, Republic of Singapore 1.8% holding. So let's have a look at the peer comparison. So some of the peers in auto ancillary industry is Subros, Bosch, Bharat Forge, XR Industries, Wabco, Amar Raja, and Timcom. And if you have a look at their ROE in financial 2021, so Endurance is having around 15 to 16%, and Subros is 19.5%, Bosch 11.2%, XR Industries 10.9%, Wabco 6.9%, and Amar Raja 8.4%. So Endurance is having pretty good ROE compared to their peers. Let's have a look at valuation of Endurance Technology. So it increased from 600 rupees to 1600 rupees, and then it decreased to around 580 rupees, and then currently it is trading at around 880 rupees. If you're having a look at their 1 year forward PE, currently it was around 22 PE, and it at some point it reached around 42 PE. And if you look at price to book, it increased to until 7.5 price to book at some point. So currently it was trading at around 22 PE, so that's reasonable valuation, I feel. Let's have a look at the revenue projection. In financial 2016, they have a revenue of around 5,228 crores. It increased to 6,918 crores in financial 2020. I am projecting it to decrease by 6% for financial 2021 to 6,503 crores. In financial 2022, 7,543 crores. In financial 2023, 8,524 crores, with a revenue growth of 16% for financial 2022, 13% for financial 2023. If you look at the net profit, it increased from 299 crores in financial 2016 to 566 crores in financial 2020. I am expecting it to decrease by 10% to 507 crores in financial 2021, and it increased to 619 crores in financial 2022, 707 crores in financial 2023, with a net profit growth of 22% in financial 2022 and 14% growth in financial 2023. So the share is currently trading at a PE of 22. So with the current valuation, the price target is 793 rupees for 1 year, 967 rupees for 2 year, 1106 rupees for 3 year. With the price cumulative growth of minus 11% for 1 year, 9% for 2 year, and 24% for 3 year. But I believe the PE will increase to 26. It's a quality company, and they have a lot of very good customers, and they are growing ahead of the industry. So it's pretty good company. So the price target I am estimating with PE of 26. So the price target is for 1 year 937 rupees, for 2 year 1143 rupees, for 3 year 1307 rupees, with a price cumulative growth of 5% for 1 year, 28% for 2 year, and 47% for 3 year. So they are a very good company. So also when I analyze their management, so their management revenue is around 1% of the net profit. So that is very good. And also the company is pretty nice. They have a very good growth, so they are growing ahead of the industry, though they are evolving to the technology. They are also getting orders for electric vehicles, hybrid electric vehicles. So I feel the company is a pretty good bet. So I am estimating the profit growth of around 50% for 3 years. Even this company can grow to a PE higher than 26, since it's a quality company. We can even, the PE can go to 30 or more than 30. So we can get somewhere between 50 to 100% in next 3 years. So this is my personal opinion. I am not recommending any stock. You have to do your due diligence before investing in any stock. So that's all for today. Thank you for watching. If you like this video, like, share, and comment, and hit a subscribe button, and also a little bell icon below.